Good morning, YouTube. Thank you so much for tuning in. Bennett Tyndall with TradingAnalysis.com. It's been a while since I've had the opportunity to host the Wednesday live stream, so I appreciate you all tuning in. Mr. Todd Gordon, our CEO and founder, had other things to attend to this morning, so we thought we'd give him some much-deserved time off and cover the show. We've got about just under 40 minutes until the market open. We're running a little bit late this morning. We do apologize, but it's a holiday week. We're in the final trading week of 2020, just around the corner from the new year. Hope you guys had a fantastic holiday break. We currently are running a yearly special right now, and if you're interested in taking advantage of that, you can go to our website. We currently have 12 months for the cost of 10, and we're actually including free of charge with that one of our most advanced courses, our Elliott Wave Mastery or our Fibonacci Mastery, which is taught by Mr. Todd Gordon himself. So be sure to check that out. And a big shout out to Todd, Jeffrey, Stewart, Mark, Matt, and Brian. Thank you guys for jumping in and making the commitment to your success in 2021. So I won't take too much time. Let's go ahead and bring in the trading analysis team this morning. Good morning, Terry. Good morning, Alex. How are you guys doing, gentlemen?
Morning.
What's happening?
Hey, good morning.
What's up,
Happy
boys?
New Year, guys. There's a couple more days left of the year, and 2020 will be behind us. Finally.
It's going to turn into history. We'll see what the next year has to bring. It's been a challenging one, that's for sure. How are New Year's celebrations in Serbia? You guys do anything fun?
Well, not much. I mean, everybody is like, like, well, yeah, 2020 is finished. The 21 will be better. So everywhere is a little bit more of optimism. But no, we are in a kind of a semi-lockdown. So stores will work until 6 o'clock, and that's it. The celebrations are strictly forbidden.
Wow.
So I guess everybody will be by themselves at home. So it will be a kind of a same team as in 2020.
It'll be a virtual celebration.
Yeah, it will be a kind of a more of a online celebration, like rest of the world. I mean, somewhere it will be more easy. Somewhere I know many people from Serbia went. We are able to fly only in 2 places without, I think, a particular COVID tests. It's I think Dubai and Zanzibar. So many of the people went to Dubai and Zanzibar from here.
Wow.
So to celebrate kind of a little bit more freely a New Year. And the rest of the folks went go to some mountains. We have snow starting as well as you in States, and the rest of us will stay in towns. So it's more or less the same team.
Yeah, I think speaking of the slopes, I think that's where Todd might be this morning. But he's actually coaching, I believe, his son's ski team or club, if you would. But yeah, in terms of the coronavirus, we just actually had and New Year's shutdowns. We just had the more contagious version apparently show up in Colorado. So first case confirmed here in the United States. It should be interesting to see how the Moderna and Pfizer vaccines interact with that particular variant. So how are things in your neck of the woods? Doing well, Terry? You guys all?
Oh yeah, we're doing wonderful down here.
Good.
Actually, we're enjoying some warm weather. Hell, it's 70 degrees. I've been out playing tennis with my daughter.
It's raining right now here. I'm just a few hours from Terry.
Yeah, it'll be here later today. Coming from you're in Central Texas. I'm in East Texas, so.
It was sunny on Christmas. I'm hoping for some rain. I'm hoping for some rain for New Year's. All right, let's get into it, guys. I'll be back with you in just a minute. I'm going to take you into the hard right edge of the chart. We're going to take a look at the indexes, and then we will move in from that into a macro overview, and then we'll be back with Terry here in just a minute. So hang on to your hats, and we'll be back in about 9 seconds with you for the hard right edge. Good morning once again. Appreciate you guys tuning in. So let's jump into it. It's been very interesting the past few weeks. As you know, we've been bullish. We've been looking for a breakout. We've been up against this expanding volatility patterns trend line, so the extremes, the price extremes, if you were to source a trend line off of that, it's still continuing to act as resistance, and that's certainly a bit of an area of concern. And we do anticipate a larger corrective pullback sometime early next year, but we don't quite feel the subdivisions are complete to suggest that we're ready to roll over already. So we do anticipate some additional upside left within this particular move. Then we will be looking for a larger wave 2 pullback. Being the fact that it is a wave 2 position, it can take you to a variety of retracement levels, so there's no sense in really forecasting this until we have some idea as to perhaps the catalyst that ignites this move, or perhaps just kind of assess the initial price action off the high. So oftentimes when you're working a wave 2 position and you don't have any sort of a fundamental or geopolitical catalyst to support the corrective pullback, you can often look at the initial impulsive structure off the highs, so whatever makes up your initial corrective leg to the downside. Once you have that initial price structure, you can then often begin to forecast retracements and then project your secondary decline, and that's when you can more accurately begin to kind of pinpoint where you might actually see that wave 2 support. So let's jump into it. As you can see here, looking at this expanding volatility pattern in the trend line, which continues to act as resistance and has continued to be respected, there's there's always a debate in terms of where do you start your trend lines, which moving averages do you use. We cover this in our Elliott Wave course, and if you were to source the trend line off of the February high and draw that through the September of 2018 high, you'll notice that that trend line was resistance in July of 19, but and it's tried to turn support back here in this wave 4, but is that the dominant trend line of this pattern? And I really don't think that's the answer. I think the answer is actually sourcing it off of the September 2018 high, drawing it through the February 2020 high. When we do that, we notice that September 2nd was where we ran into resistance, right at that trend line. November 9th, the first day we had news out of Pfizer regarding the success of their coronavirus vaccine, that's where the markets ran into resistance here off of that trend line. So I think that's the ticket, and that's where you're best to be sourcing this particular trend line. Now, zooming in just here on the daily chart, you can see the hesitation of price action as we kind of digest a move over that expanding volatility pattern. So you move up in 1, pull back in 2, smaller degree 1, 2, up in wave 3, down in wave 4. We're trying to get through it once again, okay? And we do anticipate continuation. Let's get off of the daily chart. We're going to circle the area in which that we're going to review on the smaller time frames, just to give you some context as to where that lands on the daily. So off of the daily chart, down to the 1 hour time frame, you can see that white circle transferred here over to our 1 hour chart. We could now get rid of that. And let's zoom in and review the price action off of October 30th into November 9th. You had a beautiful motive impulsive 5-wave advance that gave you a 3-wave corrective pullback, and we're now working the 5-wave subdivision inside of green wave 3. Inside of green wave 3, we've already completed the initial 1, 2, 3 down in wave 4. Wave 4 demonstrated equality to wave 2 of the same degree. Wave 3 was a beautiful 161.8% extension of wave number 1. So that's very common in terms of fib relationships within this impulsive trend. And I just lost my mouse over 5 monitors, so I do apologize. I had to find it there. Zooming in a little bit to kind of focus in on what's happened since orange wave 4, and things get a little bit subjective in terms of identifying the actual subdivision of orange wave 5. Inside of orange wave 5, we're going to look for 5 smaller waves. So far, I see an initial move up in 1, an ABC running flat in 2, another 1, 2. Here's your acceleration gap, which is very common in a 3rd wave position. And yesterday, we had a little bit of a pullback down into the 38% retracement. So I do think we continue higher. Once this 3rd wave upside fib zone comes into play, that will also be trend channel resistance that I do feel will set us up for a counter trend 4th wave correction. At that point, I anticipate one additional move to either new highs or at the very least a retest of the wave 3 high, in that wave 5s can be truncated. And at that point, I do see the required subdivision to suggest that a 5-wave move off the March low has run its course and that we will be in store for a larger corrective pullback. What's really interesting about this wave count in the S&P, as well as the Russell 2000 and the NASDAQ 100, they're all kind of lining up here. All of this corresponds with the 5-wave decline in the dollar. So even if our longer-term bearish count in the dollar is at play, it should still give us some sort of a counter-trend corrective move to the upside in the dollar, which we do think will present the perfect opportunity for the S&P, the NASDAQ, and the other indexes to pull back in a wave 2 position. Let's now switch from the S&P. We'll jump over to the NDX, the NASDAQ 100. Very similar wave count at work here. We're on the daily chart. We're going back to the March low here on the left-hand corner of your screen. We came out of wave 4 on November 2nd, up in 1, down in 2. Price action, again, has kind of been sideways and choppy throughout a good portion of this impulse. And again, you'll notice this wave 4 pullback was about a 38% retracement, so it did exceed equality of wave 2 to the same degree. Wave 3, 161% of wave number 1, very common. And from there, we have a beautiful 5-wave structure. This 5-wave structure gave us a 3-wave corrective pullback. Not only did this 3-wave corrective pullback in blue wave 2 take you to the 61% retracement, that was also trend channel or trend line support originating off of this wave 2. So support, 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 back tested once again as support in a 61% retracement, and we're starting to push higher. The NDX requires a few additional subdivisions on the 30 and 15-minute charts to kind of complete and catch up with the S&P, but overall very similar price implications in that we do anticipate an additional high, at which point we'll be looking for the wave 2 pullback. Over to the Russell 2000 small caps. Small caps have performed remarkably well as of recent. If you'll recall, we were forecasting this move out of the September 24th low, looking for 5 up and 3 down to support continuation. Off of the daily chart, I'll drop the white circle on once again, zoom in, and take a look at all of the price action that's followed. So out of orange wave 4, you have a 5-wave move up in 1, 3 waves down here in wave 2, 50% retracement. We were looking at this fib cluster, so a confluence of Fibonacci resistance offered from 2 different degrees of trend up there, which suggested, in addition to the 2000 psychological price level, that we were going to see a bit of a pullback in small caps. This could still be just 3-4 of green 5, and we get 1 additional push, retest that zone. But overall, we'd be looking for the Russell 2000 to enter a wave 4 here in the near future. Once wave 4 comes to completion, we should see 1 push up into new highs. Again, at that point, we'll have 5 waves complete in the Russell, in the S&P, in the NASDAQ, all to the upside, while the dollar completes a 5-wave decline to the downside. All right, now let's quickly touch on semiconductors. So the communication sector, tech, SMH, those are 3 of the charts in addition to the NDX that we use to forecast that orange wave 4 pullback. And we're now seeing signs of what should be a breakout here in development very soon for semiconductors. Again, off of the March low, we came out of the highest degree 4th wave, up in 1, down in 2. Let's get off the daily chart and once again focus in on all of this price action. Down on the, excuse me, down here on the 1-hour chart, coming out of orange wave 4, which orange wave 4 did represent equality to wave 2 of the same degree down there on the orthodox low. And we have, again, a 3rd wave top right into the 1618. In this case, we've actually been sideways in the form of what we're viewing as an Elliott wave triangle. This Elliott wave triangle is valid north of 210.41 and will confirm the completion of this when we move north of 218.55. So a move through 218.55 should open the door to this fib cluster, which will also be trend channel resistance. Again, counter trend wave 4, new high in 5, 5-wave moves complete, and at that point I'll be looking for a corrective pullback. Now, that's not to say we're not bullish longer term. We do remain bullish. In fact, we think that the corrective pullback that we're looking for in the markets should be welcomed. Many people have been underexposed, improperly allocated in cash, just nervous after such a significant decline. So the massive move that we had here into the March low, a lot of investors got out, went to cash, and they've been hesitant to get back on board this uptrend, and they've missed out on what's been an incredible 70% plus rally off of the March lows. So you should welcome a corrective pullback. You should be thinking now in advance how you could take advantage of that. And when the time comes, look to execute into it. All right. We're going to go ahead and leave it at that. Let's touch really quickly on Apple. If you guys do follow our free video updates, we post them anywhere from once to twice a week per analyst here at TA. And you'll know that we've been watching shares of Apple looking for a post-triangle breakout. We just moved up here in wave 3 to the 1618 near the previous all-time highs at around 138 to 140. Looking for a wave 4 pullback here in the coming sessions. And then again, another additional high left out of Apple. So fantastic move there. And we're going to go ahead and leave it at that. We will be back with you on the other side of the break. On the other side of the break, we'll be back with Alex. He's going to take us through a macro overview, talk about gold, oil, the dollar. So sit back, relax, and we'll be back with you in just about a minute.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to tradinganalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life 7-figure portfolio with our members who prefer the longer-term investment time frames with some medium-term trading and option strategies mixed in as well. So head on over to tradinganalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
Hey, traders, hello. Hope you are all well. So let's do a little bit of macro overview here at TA, our usual stuff. Let's go and see a little bit about the dollar. So as you know, we are tracking this move down in dollar, which has begun in the beginning of COVID crisis in March. Then we had swap lines and all kind of stuff from Fed to kind of serve liquidity into the system with dollars. And from then we had a drop down in interest rates, and 5-wave pattern is very close to its end. So we are looking for a support around 88 figure. And I think we are in the last sequence of this 3, 4, 5. Before we reach this final target, we have some fib ratios, which we are looking for the final target here. And it is around 87.79, from where we are expecting for now a 3-wave pullback, which might be a rather significant on the upside. So we are going to look for 2 possible levels. First one is around 94, and the second one is around 97. And usually when you have a 15% plus fall in the dollar, I think that this move on the upside can be pretty abrupt. So I won't be surprised to see a very a sudden move in 5 waves here in the wave A in just a couple of days, as presented to the first this resistance levels around 94.78. We see all of these 5 wave patterns already almost completed in the same manner in lots of currency pairs. So I still think this is the proper wave count, and that soon the dollar will start to move higher, countering the overall opinion that the dollar might continue even further lower and basically collapse. I think we are going to see from mid of January or close to the end of January a nice move on the upside in this ABC. I'm going to show you also the emerging markets. So we also track this one to see what's going on in emerging markets, and it is the similar pattern. As we know, price of the dollar is correlated with the emerging markets. Lots of companies in this EEM countries have an exposure. They're funded with dollars. So these two charts kind of correlate. And here on the emerging markets, you also see a nice 1-2 up in 3-4. And then we like the same sequence as in the dollar. So I guess around 64, where we have a nice fib confluence, we are going to see a beginning of a larger pullback to the downside in emerging markets as well, which kind of corresponds with our S&P wave count. So all of these markets, as you can see, are starting to align from the individual and macro perspective. So let's move on and see a little bit of oil there. Oil is particularly high. As you know, most of the countries are in a hard or soft lockdown. So from this potential ABC correction over, we are counting this as a first initial 5-way move on the upside, and we are expecting soon a beginning of a larger pullback back to 38.40 levels in oil, which also corresponds with our dollar higher and potentially S&P lower. So oil also agrees with our overall wave count. Let me show you some of the currencies as well, so we can see what's going on there. So I'm going to show you euro dollar, silver, and gold. So on euro dollar, same thing. The move up in this final green wave 5, it's developing nicely. After a lows in March 2020, we have a 1-2 up in 3, down in 4, and the fifth wave is kind of developing in a nice Elliott wave script, really discernible 5-wave move if you go on a smaller time frame. So let's go in a let's say 3 hour, and we are monitoring this post triangle thrust in a blue wave 4, a little bit more upside, and then a larger correction should start hitting this 121 level, which will be, I think, a nice support level for this last move on the upside, hitting 124 to 125. And as you can see here from the previous highs, this is going to be a nice resistance levels. And from there, I would expect a move down in 3 waves back to 116, 115, before potential further continuation on the upside. So we're going to talk potentially in 2021 what is going to happen. So we are going to do with our members a yearly outlook in the beginning of 2021. Also, some of the other wave counts points that we are going to go higher after a potential correction that we expect. As the gold is concerned, we are tracking 2 wave counts. One of the wave count is that we are still not done in this wave 3. So we had a nice hold here without wave count invalidation here. So potentially we are expecting a 5-wave move up to this 2200. But for now, the move in gold is kind of a weak. So looking overall the dollar wave count, I will agree that potentially we're going to see a larger correction in gold. with a more complex WXY. So resistance levels will be around 1965, which is kind of explaining this very small and not really developing nicely in an impulsive manner this move from these lows. So if I close up, this will be a nice 3 waves down, and we are heading now for a potential X wave, and then we're gonna fall down while the dollar is climbing in this potential 4th wave to this support levels around 1600, 650, from where we should see a continuation on the upside. So these 2 wave counts are in the play. I'm more kind of a biased to look this one with the next wave. Definitely this will be the key levels you should watch on gold. As the silver is concerned, I'm tracking also one of the wave counts, which is kind of agreeing with the gold wave count. So after this nice wave 1 or A on the upside, we have 3 waves down, 3 waves up, which are going to, I think, complete soon with the next wave, and then we're gonna go with another ABC hitting potentially 2021 to 18 levels. So this will be the support zone, which agrees with our fib ratios, and a really impulsive move down in 5 waves for this potential X should stop you for trying to get long on silver, because you're going to get just a B wave pullback and another 5 wave move to the downside to complete all of this kind of a corrective move, which you can see here on our screen. So just a short update, guys, from me. I hope you will use this, what we present here, in your own trading, and also I can invite you to join our Forex service at Trading Analysis, when we do regularly webinars, charts trading with all our members. So back to you, Bennett.
Appreciate it, Alex. Thank you so much. And yeah, we do apologize. The provider that we utilize to share our desktops back to the video production system here in my office kind of threw us a curveball this morning and changed their interface up. So that's why we had the aspect ratio a little skewed and had the price scales cut off originally there. So we do apologize for that. We'll be up here in just a second with Mr. Terry Long. He's going to take us through sector focus. If we can get him set up on GoToMeeting, that would be awesome. Just keeping our eyes here on the markets. Pretty quiet in the pre-market. We've got there we go. We've got Mr. Terry Long getting set up, and he's going to take you through sector focus via relative rotation graphs in the software suite Optimus. We'll be back in just on the other side of this video. Back in just a second.
Hey traders, I'm Terry Long. You know, just a couple more days left before we all say goodbye to 2020 and hello 2021. Let's start here with last week's performance of the index and sectors. You know, the S&P and the NASDAQ both retreated slightly from all-time highs early last week, and mostly sideways price action throughout the week. But overall, the S&P was down just 0.17% last week, and the tech-heavy NASDAQ was down just 0.21. Now, this week we're seeing both the S&P and the NASDAQ setting new all-time highs again, but started to fade from those highs yesterday. Over here on the sector performance, last week financials led the sectors higher, gaining 1.6%, followed closely by technology, up 0.63%. Now, for the third week in a row, energy sector once again was the worst sector, losing last week, declining another 3.25%, as the rising momentum that we've been seeing in this sector does continue to fade. The remaining sectors all declined roughly 1 to 1.5%. Now, interestingly, the combined upside of just these two sectors, financial and technology, essentially balanced all the losses from all the other 9 sectors. Remember, these are not all equally weighted, right? So market caps are different. But so the S&P was only down slightly, but technology again out in the forefront. Now, if we take a look at what's happening Monday and Tuesday, so far this is Monday and Tuesday's price action. We've got communication out here in the lead. It looks like some activity is starting to pick up in the XLC as it's up 1.7% already just 2 days this week. Consumer discretionary making a little bit of a bid also, and a little bounce from healthcare, and then you've got technology and the S&P essentially about the same. Energy, again, energy's down on the week for the Monday and Tuesday price action here. We'll switch over here to the sectors, and our leading sectors remain industrials, materials, financials, discretionary, communications, and technology, although the order has changed a little bit. Financials has moved up into 3rd place now and appears to continue to be accelerating further into the leading quadrant. Communications has also advanced. It's advanced here into 1, 2, 3, 4. Well, yesterday it was the 5th place, and now it's already up into the 4th place. So it does continue its advance. Its velocity has slowed a little bit, but we still got a couple more days left here in the week. And today's price action, or yesterday's price action, I think was causing a little bit further acceleration here in communications. Now, although industrials and materials have pushed down here into the weakening quadrant, their tails are very short, which indicates to me the very low velocity, and it's a resilience, which means these guys are going to continue to hold this position in the charts. It's a leadership position in the next coming weeks. They're just not a big long tail like financials. You can see it's got a big impulsive move to the right. Materials and industrials, they're happy to stay in this general area and not making a big, huge, aggressive move. Now, technology is now giving us more of a hint of moving north. The rally did seem to fade a little bit on Tuesday, but we're still neck and neck with the S&P. Now, the velocity in the energy sector continues to decelerate. The heading continues to rotate more shallow. Last week, let's see here. This is last week. Let's get back to there. Last week, the heading was a 60-degree angle, and the prior week was about a 50-degree angle. So you can see the angle starting to roll over. The velocity went from a 3 to a 2.5, and we've just got Monday and Tuesday's action in there. It's back up to a 2.6, but I'm seeing a little bit of slowing of the velocity and a little bit more shallow angle here. So we're looking to see some of these stocks in this energy sector starting to roll over, losing momentum. And we want to just keep an eye on this just in case we see any significant breakdown, which might result in a sharp downturn in momentum, because this group is still quite distant from the leading quadrant in terms of relative strength ratio. Our traditional defensive sectors, real estate, staples, utilities, they all continue to decline down into the lagging quadrant. Healthcare's got a little bit shorter tail, but you can also see healthcare is hooking, and now its directional arrow is pointing southwest to follow these other defensive sectors. So right now we've got a pretty strong collection of sectors leading this bull market. It's a pretty healthy market with these sectors here. All right, let's focus. Let's see. Today's focus is going to be in the financial sector. And I'm going to go back to here for a second. Today's focus is this rapidly accelerating vector into the leading quadrant on our RRG. You know, following positive results from banking system stress test, the Fed reauthorized bank stocks to resume their stock buybacks, which those had been placed on hold as part of fiscal measures taken during the COVID pandemic. But I think strengthening financial conditions seem to be propelling this financial sector further here into the leading quadrant. If we look over here just at the top 20 market cap XLF, leading stocks continue to track northeast deeper here into the leading quadrant. More stocks are also seen following this initial group of leaders. Even Wells Fargo now and Citigroup approaching the border between the improve and the leading. Citigroup with a nice respective 58-degree heading. Nice good long velocity here. These guys and the CME. CME is kind of still lagging in its trend, but it does have the right direction. I'm seeing a lot of movement towards this. Now, I want to take a look here at the KRE ETF. I think that's this one right here. This is the regional banks. And what you can see, this group here, nearly all the stocks, this is top 25 market cap in the KRE, and every one of the stocks in this group are now in this leading quadrant. I think this is most recently, we've got a collection of stocks that have recently moved across. Okay, some of these leaders, some of these early leaders are starting to see some momentum fade. But there's another group coming up behind here, like Prosperity Bank Shares, Cullen/Frost, M&T, Zion Bank Shares. So there's another group of stocks, PNC, also nice northeasterly heading. These guys are continue over here. This is Signature Bank of New York. That one is a good pick. Now, this financial sector can be categorized. Let me find it here. Find the one I want to show you here. This financial sector can be further categorized by industry groups. Okay, so we can do individual relative rotation graphs for each of these subgroups here. Okay, so each of these groups has its own symbol. Okay. And if you look here, let's pull this over so you can see what the names of these are. This is the full line life insurance. This is the banks. This is investment services, life insurance, asset managers, mortgage finance, financial administration, reinsurance. We've got consumer finance, specialty finance, and the one that's lagging over here is insurance brokers. Really, this is quite amazing that all of these guys are now turning to the right. You got a nice hook formed here in the consumer finance group. The bank stocks, you can see the banks here. Sorry, this is the banks. Yeah, the banks are deeply now into the leading quadrant. Now, I've got these groups set up here. It takes two different pages. There's so many of these different groups here. So let's take a look here. This is the banking group, and you can see it's so congested, but nearly everything we've got in this group is over here in the leading quadrant. There are a few of the bank stocks that are still approaching, but have not yet passed through the into the leading quadrant. Let's take a look here. This is consumer finance. So this one over here is interesting because I've seen this hook form, and as this hook forms, this is an early indication of the rotation coming out of this guy, right? So if I give you a little bit longer tail, you can see where he came from, right? He rotated down into the lagging, and now he's whipsawing back. So these are elliptical orbits. And then in this elliptical orbit, I would expect to see this guy continue to push right back here into the leading quadrant. So let's take a look at what stocks are in the consumer finance here. And this is where most of your credit card companies are going to be, like Discover Financial, Capital One, Synchrony Financial, even American Express is in here, right? So not every one of the stocks in here are doing well. We've got a couple here. Green Dot is not is underperforming and looks like it's going to continue to underperform. I'm not familiar with the services that they provide, but a lot of these ones, even the ones that are down here in this lagging quadrant, they've started to see some rising momentum, as indicated by their vertical vectors. So let's take a look here. I'm just trying to check my notes here. I think you might find a few excellent opportunities for some new trades with some of these stocks that are making this turn here. They've been underperforming. Their charts aren't going to look that well. Let's take a look here. You can see it's pretty flat, right? Pretty flat on this chart, but I'm seeing a lot of volume. This is huge increasing volume being, these shares are being heavily accumulated here all throughout middle of December here. And if we start to see this trend broken higher, here's the pre-COVID high on this one. We'll mark it right there. But we've already broken above this consolidation high level, and so we're now challenging that. So even stocks that have been underperforming down here, they're starting to make their move, and you might pick up some new ideas from this. So Bennett, I think I went over my time allocation, but with the financial sector moving deeper into the lead, I thought it would be good to drill down a little bit more into detail. Guys, looking forward to the New Year's. I'm sure all of you are, and wishing you and yours Happy New Year's. Back to you, Bennett.
Much appreciated, Terry. And let's go ahead and bring back in the trading analysis team. And markets just opened up here, keeping our eyes on the opening session. Hope you guys have had a fantastic holiday season. We've got another 3-day weekend ahead of us. The markets will be closed on Friday, January 1st, 2021 for New Year's Day. What else? What else do we have going on? Cryptocurrency. So I saw a couple of comments in the chat asking Alex for Bitcoin. He's got his own show now specific for crypto. He hosts it every Thursday morning, 9 a.m. Eastern on our Trading Analysis YouTube page. So if you go to youtube.com/trading analysis, all one word, you can get subscribed and signed up and stay notified for when he does go live. So looking forward to that. I would encourage you guys to check it out tomorrow morning. And yeah, members, we'll see you on our member webinar here in about 27 minutes. We do apologize for starting the stream a little bit late. Again, we were thrown a couple of curveballs this morning and with our desktop sharing provider. So we'll leave it at that. Again, we do have our end of year sale in effect. We have 1 year so 12 months for the price of 10. That's $354 in subscription costs saved. And in addition, we're throwing in a course of your choice, one of our mastery courses. We have our Elliott Wave Mastery, Fibonacci Mastery. Both of those are taught by Todd. Those regularly sell for $1,000, so it's a pretty good value if you're looking forward or if you're looking to get set up for 2021. But hey, thank you guys so much for tuning in. Hope you have a fantastic new year. And team, appreciate it. Any last words of wisdom before we send them on our way?
Thumbs up, guys.
Happy New Year! All the best, guys.
Absolutely.
So
if you didn't,
forward.
yeah, it's gonna be exciting.
Safely.
Exactly. Stay socially distanced, and we'll leave it at that. But hey, if you guys did enjoy the content, please give it a thumbs up, subscribe, turn on notifications if you want to stay up to date. It helps the YouTube algorithm know that you're enjoying the content, and it helps distribute it accordingly within this particular industry. So thanks again. Markets just opened. We'll see what's going on, and members catch you in a little bit. Have a good one. See you guys next week.
See you next week.
Take care.
See you. Bye-bye.